Thought I was going to do the chart markup. I was going to do the chart markup for gold, and I said I might as well just log on and do it with you guys and girls because I'm going to do it anyway. So I might as well just do it with you while you're here. So this week so far, I'm calling the first setup on gold a loser. So we're three winners from last week for the sells, which was the continuations from here, here, and CPI, which was there. So 3 days in a row, it came back to the same area and sold. So we was able to get a sell trade set up. See on the CPI news for the sell on gold. I actually managed to do that on a live recording, which is on YouTube, which was a 270 pip sell. My entry was pretty much at the top here, based on the liquidity level. Um, the liquidity levels here, basically, there was two liquidity levels for these highs. So price action dropped about 270 pips, which I gave off. Then we was looking for buy continuations. I did manage to actually make profits. I'm not negative from gold this week. I'm actually in profit. On Monday, it never pulled back. Well, Sunday, Monday market open, it never actually pulled back to the demand level to buy straight away. What actually happened is price action just took off straight like that. So I've deleted my chart now, so you can see there's no more analysis on the chart. So as soon as we do get a new daily break of structure, I basically will delete the chart. So and I will delete the drawings on the chart and then start afresh from there to keep my charts nice and clean. So I have got a video I have recorded about teaching you how to work out I would like to call it perfect break of structures. This method that I'm going to show you in the recorded video, and not this one here specifically, but in the recorded video I've done of how to pinpoint. It's what I teach in my gold level of my VIP Zooms. But I do believe it's something very important. I don't think it's something that needs to be specifically in a gold level Zoom. But then again, it does help people to understand the bigger picture I explain in my one-on-one sessions that you can have with me if you book one in. Um, but basically, what we're going to be looking at is something very simple. I tell people all the time, just pay attention to the daily time frame. I don't know why a lot of people run from it. I'm going to keep saying it all the time. Even if you scalp the 1 minute chart, if you trade the daily off of the trend of the daily time frame, you're going to have a lot better chance of actually catching those bigger winners that you're trying to get, basically. So now we're just going to follow the process. So again, we've got three winners, two losers so far on gold, literally. Let's hopefully we can make some more from this. We did have NAS 100, which was a winning trade this week though. But obviously that's not counted with the gold setup so far. So what I'm going to do first is I'm going to get my path tool. So if you haven't got the path tool up, you need to go to brushes here. Where is it? Brushes. It's this one, I believe. Yeah, you need to go to this tab over here, brushes, and then you want to put on your path tool, which is this one here. So it's this one you want to click on, but at the same time, you want to put this star on here. So this star brings up this favorites tab. So all of the icons that you favorite, all the tools, drawing tools, etc., Fibonacci, long and short tool, whatever you want to do, if you put a star beside it, you will have it here. So now the next thing I'm going to do is just grab my path tool and then I'm just looking for the market structure break. Again, I have done a video on this that I'm going to be uploading soon. I just got to edit the video. It's like 30 minutes of editing. Again, if you are struggling with this even after the edit, because some people do, then just book a one-on-one. Like we've all got some type of funds. The one-on-ones I do for 2 hours is 60 GBP. It's not going to break your bank, especially if you've got X amount of money in your account, your trading account. I'm sure we've all got 60 GBP pretty much. What's good, Bronson? So what I'm going to do is pinpoint from anywhere, absolutely anywhere here on the chart. I don't have to pinpoint from 3 months ago or a week ago. I can pinpoint from anywhere. But just to make it easier for you guys and girls, I'm just going to start from here. And it's not even to make it easier before anyone says, oh, John, you're cherry picking. Can't really cherry pick a trade I'm trying to give you or a trade idea. But basically, it's a simple rule. If you've got a bullish candle, you always want to start your path tool at the top of your bullish candle wick. And if you've got a bearish candle, sorry, you always want to start at the bottom of your bearish candle wick. Um, if you remember, um, give me a second, Bronze. Hold on a second. I don't want to go into something new. I've never used the magnet tool before, but I can go into that later on. I don't want to, try and figure out something. I'm trying to make the video quick and short and quick for people to be able to learn from. But I will look into that definitely, Bronson. Yeah, the magnet tool. Um, Now, anyway, if you basically start your again, I'm gonna just go over this. If you start your path tool from the top of a bullish wick and then the bottom of a bearish wick, this will help you to identify market structure breaks in the market, and you'll see what I'm going to do. If there's obviously candles that have pretty much no wick or no wick at all, some candles don't have a wick, then again, it's still just the top of that bullish candle and the bottom of the, no wick bearish candle. So here, I'm just going to start from up here. And when I start from up here, you're not going to keep clicking the path tool every single candle. If I see consecutive candles in a row, which is bearish, I'm going to now move my path tool all the way to the bottom of this bearish candle here, because all of these are bearish at the moment. We can literally see that. My bearish color is green, by the way, in case that's confusing anyone. My bearish color is green and my bullish color is gray. So now, anyway, here is where I'm going to put my path tool towards because I don't need to worry about all of these bearish candle lows because there's a whole bunch of them in one segment. So here's where I'm going to go to. And then obviously I've got a segment of bullish candles here. So I'm going to do the same thing up here. And then I'm going to go down here to this bearish candle down here again. And then I'm going to go up to this bullish candle and down to this bearish candle and then up to this bullish candle here because this is the highest point. And then I'm going to go down to this bearish candle here. Simple as that. So you can do the same thing I've just done there from anywhere on the chart. Just make sure if you're starting on a bullish candle, you start at the top of the bullish candle. And if you're starting on a bearish candle, you start at the bottom of the bearish candle. Always the wick. And if there's no wick on that candle, just use the bottom or the top of the body of the candle, obviously. So bullish is the top, bearish is the bottom. Now, why this is so fantastic is you can easily do something as simple as this, where you could just go to hide your candlestick chart, and now you can see market structure straight away. So this is what I like to call the 100% method of finding out the trend of the pair you're trading. Again, you can do this on any single time frame on any single trading pair. There's a video I'm going to edit even after this. I just wanted to do this markup for gold because I was about to drop it in the free Telegram group, but I said, hey, I might as well just do it with you guys and girls. Seeming I'm here. There's no point just doing it alone. So anyway, now with me being able to see the perfect market structure break, we can see here straight away. I'm just paying attention to two things. Has the market broken through the V part of my market structure breaks, which is the swing low, or the A part? So there's a V and an A. So if it's broke through the V, I'm looking for sells. If it's broke through the A, I'm looking for buys. I'm looking in this aspect for buys and sells because I'm trading from the daily trend. So again, what I'm going to do now is something as simple as this now. Boom. So where are we? What I want to do is always keep on my candlesticks, but we can see straight away if the market does break this low here, this would be a break of structure. If the market does break this high here, this would be a break of structure, something like that. So this would be a bearish break of structure here, and this would be a bullish break of structure on the daily chart there. Something as simple as that. But again, I want to make sure I see the candlesticks because I want to know that a full body candle has closed through any of these here or these A segments. If you've got your microphone on, please, if you can just make sure it's muted, just in case that doesn't come through in the recording. All right, cool. So we're just going to remove, not the drawing, we're just going to remove these two here. I'm just going to switch back on my candlesticks. Yeah. So now I'm just looking to see what the market's done recently. I don't even need to care about the last ones. Like I said, I just want to care about what's happened right now. And what I can see right now is the market has a V point here, which is a swing low. And this will help you to identify break of structures. Literally, this gives you perfect break of structures, and a break of structure it shows you a trend in the market. So this is going to show me what trend the daily chart is on. And right over here, guys and girls, we can see what happened. This is why I told everybody in the free group today in Telegram, let's just wait for the daily break of structure. We can see that there's a daily break of structure break right over here. Boom. So where we've had this daily break of structure, I'm just going to go to my templates and my saved bit, and I'm just going to go to BOS daily. So there we go. We've got a daily break of structure there. Now I don't need this path tool anymore. I can just delete this. So the next thing I'm going to do, pardon me, is I'm just going to now go and get my rectangle boxes. Again, you can find the rectangle boxes in your brushes, is it? Is it brushes? Yes, in your brushes. Just put a star beside it. Most people already know how to do that anyway. And if I've had a daily break of structure here, I'm looking for my supply candle on the daily chart. So my supply candle on the daily chart is right over here. Boom. So my supply candle on the daily chart is this one here. And what I would do is just, I could extend it all the way to the right, but it doesn't really matter. You could put it wherever you want. And now what I'm looking for is I'm just going to go to my template again, and I'm just going to go to supply daily. Boom. So therefore, I can see now my supply candle is this one here on the daily because your supply candle after, always after a break of structure, the supply candle is always going to be the last bullish candle before the sell started to happen. So it'll be the last bullish candle before the sell started to happen. And you can even just make it easier for yourself. It'll be the last bullish candle before the break of structure. So this is two bearish candles and a break of structure was here. This is the last bullish candle before that break of structure. So I'm just going to mark up this area here. Boom. So this is my supply area. I'm going to make sure it's right. So just make sure. Tend to do this first. Boom, boom, boom. Yeah, so it's the size of the candle there. Cool. Now, the next thing I'm going to do, because this is the bearish supply level here, I don't need to worry about anything above this level because if price action as it stands was to break this high, we would be going bullish. So all I need to care about is this area right here for now on the daily chart. Now, the next thing I'm going to do is go to my 4 hour time frame. Then when I go to my 4 hour time frame, it will be the same exact thing here. So what am I going to do? I'm just going to get my path tool again. And now because I know my supply area on the dailies here, I don't need to care about anything above this area because if it breaks here on a daily time frame, we're going daily bullish, and then I'll change my trend bias. All I'm going to do is get the path tool again and just rinse and repeat. So I'm just going to start from the high of this bullish candle and I'm just going to work my way down. Boom. So from the high of this bullish candle, there's two bullish candles here. If you can't see the color of the candle, zoom in on your chart by doing this. Zoom in. So this isn't even bullish, it's actually bearish. So that was good. I did that. So you can see the importance of that. So always zoom in on your chart if you can't see, because you will cause yourself a problem. And if you mark up your break of structures incorrectly, then it just, it makes no sense. You're not getting 100% accuracy, let's just say, in terms of your break of structures. That's not in win rate. That's just in your break of structures. This is very good. It's not a lying factor. If anybody's traded with me long enough, they would know I am not talking rubbish. So I'm sorry if anyone has joined here expecting to get an Asian session gold scalp. This isn't obviously for you. You probably need to join someone else. I'm trying to teach people how to make money so they can be self-sufficient. So right now you can see here, if we go to this level, sorry, let me just check my NJ trade quickly. Yeah. So now what we're going to do is go to the bottom of this bearish candle here because there's two bearish candles in a row. Then we're going to go up to this bullish candle and then we're going to keep going down to here. Now we're going to go all the way. Look at the consecutive bearish candles. We're going to go all the way down to here and then we're going to go up to here and then we're going to go down to here and then up to here and then down to here. Let's zoom down a bit more. Then down to here. So this is where it stops. We're never going to count the last candle on any time frame that you're looking at because there's no point. It doesn't make no sense because obviously the candle hasn't closed yet. So far, is everybody following me? Just so I know. Is everybody following what I'm saying so far? Please let me know in the chat. Let me know, please. There's 14 people in here. I'm expecting to see at least 6, 7 replies because we should all be active. Nobody should just be watching this in the background because everybody's going to be asking me what gold is doing. And, you should be watching what I've explained here. So right now, cool. So what we can see from here is the same thing. What do we have, guys and girls? We have our V's and we have our A's. Again, perfect. We have our V's here and we have our A's at the top. If it breaks one of these V's, then we're looking for sells. And if it breaks the A, we're looking for buys. It's very simple to see this as well, guys and girls. This is like baby trading. I'm going to be doing a lot more starter videos on the basics of Forex because literally the market is just made up of just highs and lows and lower highs and higher lows. And once you identify that, you can use order block, supply, demand, support, resistance to be able to find your re-entry. You can use fair value gaps. I'm telling you, liquidity if you want. But if you just pay attention to what I'm saying here, this is the core basics of what you need to know. So Yeah, no, literally it's baby trading. I'm not giving no people no gas. And all I'm doing is creating Neo the indicator to be able to pick up all of this stuff more perfectly for you. Do you understand? So therefore it's going to do automatically for you, checking all pairs, all this stuff. That's what Neo does. It's not a fancy lagging indicator or as people will think. It's just doing exactly what I'm saying here. And it's going to get coded more and more to just do all of this automatically for you. So you can see everything at one glance. So right now we can see there was obviously a bearish 4 hour break of structure here. Boom. So we had a 4 hour bearish break of structure here because this low was broken. So what we're going to do, guys and girls, we're going to do the same thing. We can see, in fact, let's start from this supply up here and then we'll work our way down. So we're always going to draw our 4 hour supplies because we've already done our daily. So we had a break of structure up here. Boom. Yeah. So we'll start from here. So right now, what am I going to do? I'm easily just going to do this here. Boom. I'm going to draw from the highest point, which is up here, and then I'm going to mark out to where the bottom of that bullish candle is, which is this one here. I always go to my highest points and then or my lowest points depending. So instead of it just being the bullish candle here, which stopped here, just in case it wants to go higher, because this was the highest point, I always cover the highest or the lowest points of the wicks as well from the last swing high or swing low. So as you can see there, boom, I covered that highest point, even though it was the bearish candle high, because that's the highest point of this sell. So right now I've got a 4 hour level here as well as a daily level. So that's a double confluence of strength for a possible reversal in this area. And then what I do, so just so you can see it. So it's taken me a bit longer to do this breakdown in terms of how I would do it and give you the chart. So obviously I'm explaining it while I'm doing it. But now we can see we have that break of structure over there for a possible, sorry, we have a break of structure here on the 4 hour. And after that break of structure, we have a supply for a possible pullback to here and continuation of sell. Now we have the same thing here. This was the last bullish candle here. And again, the highest point is the top of this bearish candle. So no longer am I just paying attention to this bullish candle. And I call this the John version of supply and demand. Some people will only put it here on the bullish candle from the whole wick, from the top of the wick to the bottom. I'm doing the bearish candle as well. So I've got the whole version of this high right there. So this is obviously a 4 hour lower high in the market for a continuation of sell. I'm carrying that whole area. Boom. So now I've got a 4 hour supply here as well in the market, as you can see. Okay. And then boom, I've got another supply here. So you can even see how supply and demand works straight away. It is the last bullish candle. That's exactly what I've shown there. You're probably getting confused because the color of my candles again. Remember, my candles are green. They're green. I keep my candles like this color to go with the whole matrix theme, but it is the last bullish candle that I've just marked out there. This is the last bullish candle here. It doesn't matter what time frame. It will always be the last bullish candle for supplies and the last bearish candles for demands. So it is. This is the gray candle is my bullish candle here. The gray candle here is my bullish candle here. So can you see? And remember, this is a daily supply, so don't pay attention to this daily one on this 4 hour chart. Just pay attention to what I'm doing here. This is the last bullish candle here. This was a bearish candle, and you can see the last bullish candle was the size of my supply, but I made sure I covered the highest point of this swing high here, just in case it wicks up to there. And then the same thing here. This was the last bullish candle before the break of structure. And again, this was the highest point, so I covered that whole area. Does that make sense? Okay. Let me know if that makes sense to you.
Yes, but the first supply in the 4 hour chart, there is a fourth candle is the last bullish candle, I thought,
Yeah,
with the
no,
wick.
this one here,
Yes,
you're looking at this one here. Yes, there is this one here, but what we can see is that this candle here, yeah, so even this is what I would say that you just have to move this down to this level here. So
yeah.
even though there's a bullish candle right over here, this one is covering this whole area. You see this one
Ah,
here is pretty
okay.
much covering it. So yeah, so you know you're absolutely right with what you said there. That's a good spot. Probably still a bit
Yeah.
tired. That's a good spot. So right now here, yeah, this candle
Mm.
is also covered. So sorry, this was the last bullish candle here, but the reason my eyes skipped to it so quickly is because we obviously have this candle that is still covering this area
Yeah.
for this breakout. So again, all I did is move it from the bottom of this wick here, you see right here, and I just moved it a little bit more down to just cover this wick. So my zone became bigger. So you're absolutely right with that analysis, and that was a good spot there, mate. Very good spot. Yeah.
Yeah, you teaching in the one-on-one.
Yeah, no problem, mate. Yeah, there you go. So you can see how the one-on-one's paying off for you. You even managed to spot something that I would have just missed that slight zone. So that is a very good spot, mate. So right, we can see here now. Boom. So when we move on to the next point, we can see there was a break of structure here again. And again, this was the last bullish candle here before the break of structure. So now what you could either see just based on a 4 hour time frame, what happened? Price broke down, pulled back to this 4 hour supply. So anyone that did catch the sell before the daily structure break happened, here was your re-entry, just to show you how this already does work without even going too further than that. If you were 4 hour trading with this and not using the daily trend, you would have literally have put your stop loss just above this supply like this, and then boom, this was a 2.5R sell trade continuation if you was using the 4 hour trend instead of the daily trend. I prefer to use the daily because it just gives you a stronger confluence. But what we can see here straight away is, again, this isn't a trade we would have taken based on how I teach you. Now you can see straight away there's another break of structure based on this candle. Sorry, not based on this candle, but this was the supply candle based on this candle here, which is the low, the V point. This candle broke that low. So this is the last bullish candle here. So what do? We're literally going to do the same thing. We're going to mark our supply from the bottom of that candle, and it would it would have just been the gray candle. But what did I say before? This is the highest point of this sell. So we're going to mark our supply from here to here, like this. Boom. You see? And then marking our supply from here to here. Now the next thing we're going to do is this. Move it here to here. I just want to make it bigger, so I've just got more space because obviously price action can move. And then we're just going to do the same thing. So right away, again, we have now got the supply, 4 hour. There we go. Boom. So now we've got all of our daily and 4 hour supplies. So now you're starting to see how the chart's going to start looking like how I'm giving away these ideas. So now I'm going to basically just remove this and move this all the way over here as well. And then I just go in here and just move this to the upside just so I've got there. Boom, cool. So now I'm going to just go back to my daily time frame. Very simple. So now going back to my daily time frame, the next thing I'm going to actually do right now is what, guys and girls? Boom. Is I'm just going to now mark out the levels that I give you guys and girls. Nice and simple. So I know that there's a level right here based on this line right here. And there's a level here. And then there's a level here. So it's just the top and the bottom of the supply zone. Boom. And then there's a level here. So now I can see the writing is overlapping here. So all I'm going to do is just go into text and just move the writing above that level. Okay, it wasn't that one. It was this one. Just so it looks more clear. Yeah. And then right now, I'm going to just keep doing this. Boom. So you're starting to see how the
John,
chart is looking like mine. Yeah, I'm listening.
yeah, can you change? Can you pair the lines in different colors so we see which ones belong, like which of these lines belong to each other in terms of the top and
The
bottom
4 hour
of
and
the.
which one belongs to the daily. No problem at all. I'll
Yeah,
do that
thank you.
going forward as well. That's fine, mate.
Very much appreciated.
That's okay, mate. I'll just change these white for now. Yeah, cool. So the 4 hour is white, but if it is the set, if it's the double line, so sometimes the daily is going to have the top and or the bottom of the 4 hour daily, it'll be the same color because I can't make them two different colors if they're on the same line, as this is the top of a 4 hour and a daily, but this is the bottom basically of it. So what I will do in future is I'll just do it like this to make it easier for you. How can I do it? I'm trying to think. I might change the colors in future, but I'll just do this for now so you can do. Uh, I'll do this for you guys and girls. Hopefully, it doesn't create too much mess on the chart because I don't want my charts to be too messy sometimes. So 4 hour supply, no. Does that make sense for everybody? If I was to put like 4 hour supply low, so that basically means the bottom of the 4 hour supply um area. Does that make sense? And I could do something like this for you. Yeah. And I could do Does that make sense? Let me know, guys and girls. Yeah, I'm pointing it towards the right, not the left. Yeah, should be, I believe. Is it left or right? No, it's right. Yeah, it's towards the right. Yeah, does that make sense like that for you guys and girls? I do try to make my charts as easy as possible, but it does make it difficult because when I do something like this, sometimes you got to remember every single time I make an adjustment just for a specific person, somebody else is either going to have to ask me to break down what does that mean? Because somebody might say to me now, what does that mean now? And then you got to remember every time I make adjustments, I might have to explain to 5 or 10 people that adjustment just because it could be specific for the one person that asked me. So I do try to do things sometimes, but at the same time, I don't want to do too many different things because every single time someone's going to feel like they've missed out information or there's this. And then you always got to remember something might be very simple to you in terms of explanation, but then to other people, they might have a language barrier. They might have a this, they might have a that. And then once we start going on it, remember, I'm the one who has to do all of the work on that back end of that. So that's what I said. I have no problem being very helpful, but at the same time, it can affect other people because I'm going to have to teach them how to do it, to understand it, if that makes sense. Yeah. So we just also have to remember that. But I will be doing this going forward just so people can see it. And I get it, it's because people might be confused on what's the 4 hour and the daily supply or demand. Obviously, I completely understand that.
So, John, given that that at the bottom you've got the two supply zones overlapping each other, so would you say that if the candle wicks up or comes up to the bottom of the supply zone at 2017.873, that would be the place to put in a sell order and with the stop loss at 2033.032? Or am I misreading this?
let me continue the whole process and then we'll get into that point so I don't jump because if not, I'm skipping.
Okay,
If I'm
thank
not,
you.
I'm going to be skipping things that could be crucial to other people. So let me just mark
Hmm.
all of this out. So now we can see that we have our supply here, we have this one here, and then this one here would be the daily low. Another thing that can happen is if these lines are like congested together sometimes based on price action consolidating, um, basically the writing can overlap a lot. That's another thing when you start doing what I'm doing right now, daily supply low. So there we go. So there we go. So we've got all of them. So you can see which one is where and how. So I'll do the same thing here. So 4 hour supply low. So let's just clone this one here. I'm just going to delete all of these ones and then redo them quickly. 4 hour supply low. And then clone this here. 4 hour supply low. Let's clone this again. Let's do this. Mhm. There you go. So just on what I've done so far, does this make sense to you guys and girls with the writing on the right of the screen as well? It's on my right, it might be on your left, I'm not too sure, but on my right. With the writing and the way I've done the supply and demand so far, does this make sense to you guys and girls?
Yes.
Yeah. Okay, so now you can see all the high of the box and the low of the box when it comes to the supply and demand. Cool. So now what I'm going to be doing is the next question that you ask. Okay, where are you going to be looking to enter from? So what I would do, sorry, let's not jump. This is why I said let's not jump. Let's not jump. The next thing we're going to do is work out our take profit levels. So for me to work out my take profit level, what am I going to do? I'm just going to go to the weekly time frame right now. Yeah. So you can see how I started to break it down. That's why I said let me do this zoom because I don't want people to be like, John, I don't understand what's going on, or in terms of your chart markups and everything. Because I feel like sometimes people are not taking advantage of my charts because they don't understand why I'm making them in the first place. That's why I'm doing this. So here, we're going to go to this point here. And we're always going to look at any previous weekly low if we're looking at sell trades. Obviously, it's the supplies, so we're looking at sells. And if we're looking at buy trades, we're going to look at any previous weekly high. Now, the reason for that is at every single weekly candle, there is liquidity at the high or the low of the candle. There's always liquidity at resting at the high or the low of any weekly candle, because it's obviously where price action went to the lowest point in that week and reversed or went to the highest point. So for them to reverse a weekly candle from its high or its low, there was obviously liquidity left there because they've placed the order, there's stop losses, whatever you want to call it, there's money at that area. So where they're going to go to in future, we all know about liquidity grabs. So I've seen that it's a very good percentage chance of price action heading back towards that area again, because what do? The price always goes to grab liquidity before it moves, and it's got enough order, it's got enough money to make the order for the buy, continuation, or the sell. So I'm just going to see the question that was asked here. Okay, nope, so it's just a yes. Okay, so the next thing I'm going to do is just put my take profit level here. So here's my TP1. And again, for my TP1, I'm just going to go to target low. Boom, here. And then for my target low 2 is just going to be here, which is this candle here. I don't need to pay attention to this level here because price has already grabbed the liquidity there. We're looking at where price has not gone to in the current day or current time. Price has not gone and grabbed this wick. It's grabbed this wick with this candle. All I need to care about is where price hasn't gone to now. So it hasn't grabbed this wick. It hasn't grabbed this wick as we can currently see. And then if I was looking for a TP3, it will be the same thing here. Boom. So these are all my target areas as to where price can go for right here. These two wicks are right beside each other. So if you get ones like that, I always just go to the lowest one like that most times because it'll probably do like a big push through those levels. So now you can see I've got 3 TP levels. So from everything I've worked out here, I've showed you how to identify market structure using the path tool, which is this zigzag tool here. And this is how you can find breakup structures in the market. Yeah. I've shown you how to draw your supply demand on the daily, and the 4 hour is technically the same as that thing, just whatever time frame you decide to use. I'm using the 4 hour and the daily. Yeah. And then the next thing I've shown you is how to identify your take profit levels as well. Now we're going to answer the question that was asked. How do we know which one price action can go to? Now, we never actually know the exact one price action can go to, but you start to gain an idea of what price action can do. All you're looking for in price action, this is why I said you can keep it very simple. I'm just using the concept of supply and demand to find my lower high or my higher low re-entry for the continuation of this new daily downtrend that is formed based on the breakup structure here. Yeah. So where could the lower high or the higher low form? I'm saying it can basically, we already know we got 2 target areas. It can either form in here or it could form in here. Now, for me to get an idea of this, I'm not going to say that gold can just sell from here. Sorry, no, I am going to say, no, I'm not going to say. We know there's 2 areas where gold can sell from. Now, realistically, I don't want gold to go all the way back up here, because if it does, it's going to be very close as it looks right now to breaking daily bullish structure, which is at this level up here. You see, if price action was just to do a massive bullish candle today and it broke this bullish candle's high, this one right here, let me just do this. This will be better. If it broke this bullish candle's high here, it's going to go daily bullish. So that makes my trend bias change again. I'm going to have to delete this and do a daily break. But, you know, the likelihood of price doing that is pretty slim. There would have to be some major news for price to buy that high. So I'm not interested in the supply level up here because I'm not expecting for it to go here. It's got a bigger chance of pulling back to this level. People are going to use whatever versions of trading they want. That's up to them. One thing people will probably use is a Fibonacci from the swing high to a swing low. If you're trading smart money concepts, you're probably going to say the equilibrium level on a time frame, which is the 50% of the Fibonacci, is within here as well. Other people are going to say it's a teacup pattern or whatever they want to do. The logic is simple as I'm just breaking down simple structure. If price buys to this level up here, it's going to go daily bullish. We don't want that to happen. So guess what, guys and girls? I ain't looking to take my trade up here. I'm looking to see gold go to this level and sell. And then what I'm going to do now is something as simple as this. I'm just going to say, hey, if it goes to this level here, I can look to put my first entry for a sell like that. I do not wait for any breaks of structure, 1 hour, 15-minute, anything like that. If it goes to the supply and demand, how I'm trading gold and how you see me taking my gold trade setups, what I'm showing you here, as soon as it gets to that area, so I could even put a sell limit there if I want to, I just enter the sell trade and let it do what it does. Because I will the majority of the time, it's rarely you see me use the risk I used the other day. Yeah, rarely. I will most of the time have a small enough risk to just let the trade do whatever it wants. And that trade that as you saw that risk on, I was watching the trade. So if I'm not going to be overwatching the trade, like I'm in NZDJPY in 35 accounts, people, I'm in one trade. My risk, apart from the super growth trades, my risk is pretty reasonable. Do you understand? Yeah. It's reasonable. On my prop accounts, it's reasonable to the account side. So again, I would just have my pending order here. So you can see John will give you an arrow from here to here. Now, with me making this make sense for you, now you can see the 4 hour supply. So I might have to do this for you. So the overlapping, I'm trying to think, hold on. Okay, no, that makes sense. That makes sense. We can do it. So now you can see with the right in here, where would your stop loss be if you want to take this trade from here? So if you've got your first position in this trade set up, obviously you're looking to put it from the 4 hour low entry, as I've written over there. I'm just gonna save these and then I'll have them on like a, the what do you call it, the favorites tab. So I'll be able to just do them every time going forward. I'm gonna basically put my stop loss where? This is the 4 hour supply low. This is the 4 hour supply high. So there you go. My stop loss is here. Never put your stop loss directly on the line because price action can wick. Give it a little bit of breathing room. But you see what happens here because price is here and this is the area I'm looking at. This is how John is able to trade. It's so close to each other. Two would technically be. So why am I going to put my stop loss here if I'm going to trade this? I would decide to cover this whole area, lower my risk on this bottom entry just in case I'm wrong, and then I've got this whole area as my theoretical stop loss. Literally, I never use stop losses on my trade, people, as well. I always explain that. Some people do, some people don't. I don't. I just lower my risk, and I'm happy making slower money than super fast money all the time. I'm just happy with it. It doesn't really phase me. So now here's where my target level is. So if this trade was to win like this, yeah, this would be a 2.5R trade with your theoretical stop loss here. If you want to use a stop loss, if you're a beginner, you can use a stop loss. I'm not telling you not to. Whatever I do is nobody else's concern if they don't want to follow that. What I'm teaching you in terms of the structure, 100%, I'm telling you this bloody works. If you want to trade and make some money, what I'm showing you here works. It's not nonsense. It's not a magical strategy. It's just price action with a key area, a lower high re-entry for the sell continuation. So now here anyway, we can see how I would put my stop loss overall might as well be this whole area. But if you want to put your first entry stop loss, you can put it just here at the 4 hour high. And then if you're taking your second position would be based on this. So again, what is John going to do? John is just literally going to draw the second arrow from the low of the next 4 hour supply and tell you this is where price action can go like this. And then if you are not going to enter on the bottom of the first 4 hour supply, you enter from this one up here. And then again, you have your stop loss just slightly above here, like this. And then boom, there you go. And guys and girls, I kid you not, that is literally it right there. So can you see how the chart looks exactly as what I would give you in the free Telegram? Apart from the new update I've done over here, can you see exactly how it is, exactly what I would have given you in the Telegram without this? I don't put the short and long tool there because I believe, first and foremost, let me ask this question. Did everything I just did there, did it make sense in terms of a 30 to 45-minute explanation? Did it make sense? Everything I've done there. Somebody that's a new
Absolutely.
beginner. Sorry, go ahead, mate. Sorry.
So absolutely. Yes.
Somebody that's a new beginner, please can you answer if this is the first Zoom you've got in with me? Because there's a lot of, loyal people to John. That's cool because I respect them. They love what I do. I get it. They get what I'm doing. But if you're new, I need to know if you're new. Obviously, if you don't understand nothing about supply, demand, or anything, you probably need to book a one-on-one so I can explain it some more. But if you have a fair idea about supply, demand, and everything I said, is it basic to understand what I just said? I want people that are not the long-term John members. Yeah. It is recorded, Nick. Yeah. I'm just looking at the chat right now to see who's not a long-term member. Let's say we want to minimize our risk. Would it be okay to reduce our stop loss size to the next supply? Yeah, you can minimize your risk. Remember, if your stop loss is going to be bigger and you don't want to be overwatching the trade, just minimize your risk. That's basically it. So you can do all of that. That's what I said. I would just lower my risk. So, it's literally a 100K account. Most of the time you see me posting is a 100K account. Do you understand? So, and you can see I've entered a 0.10 on a 100K account. I don't enter every single day. I'm not entering a free lot or whatever. I'm like, most times the most you'll see me enter like on average is between a 0.20 or a 0.30. But most times I enter like a 0.10, 0.20, something like that. Like just lower your risk, man. If you're not comfortable, lower your risk. And if I do enter a higher position like a 0.80, as soon as it's made some type of money, I'll close that back down to a 0.30. And then I've made profit. So if it does lose, I've covered that profit. But yeah, you can see exactly what's going on here. So did I answer that question, by the way, Ryan? Yeah, you just lower your risk basically if you wanted to minimize it. Does that make sense? Yeah, that's no problem, Ryan. Yeah, so for the second entry, it's the same thing, mate. It's no different, Bronson. Think of it very one-sided. It's either going to sell from this entry here or it's going to sell from the second entry. Remember, I've marked out the low of the supplies and the highs of the supplies. So the second entry, this is the second box low. Yeah. If price action goes to this level here, then you can sell from here. Where's your stop loss going to be? It's obviously going to be at the top of the second box is high. So you either enter here for your sell continuation or you enter here. If you enter here and you want to enter the second position, enter low risk here because you're not too sure if this one's going to hold, and then enter a little bit higher risk on this one here. But make sure you've worked out the risk you want to take on both of them. And you can work out the risk because you know the size of your stop loss. So before gold has even got to this area, every single person should know their risk. Every person should. I've given you an entry point, I've given you a stop loss point, and I've given you a take profit. This is why I don't give out the long and short tool and tell people this is the signal trade. I don't need to do that because I've done, and this is not at you, Bronson, this is at everybody in the group. I've done 99% of the work for you. Why do I need to do long and short tool and tell everybody to enter now? You've got a stop loss area, an entry area, and a take profit area. The least you can do is enter, you can work out your risk and enter the trade. That's the two things you got to do. Work out your own risk because obviously it's your own account size, and then just enter the trade. So I'll even make it fair. I've done 98% of the work. You got to do the other 2% as a trader. You understand? But I did this Zoom as well so people can understand the free um trades I'm giving out. So obviously I can put this in the chat. I'll put this one on YouTube anyway, because I feel like I went pretty in depth and people got a chance to ask me questions as well. Um do 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 do. Do you enter separate transactions for TP1 and TP2, or do you have one trade and take a percentage? It just depends if I'm at the chart or not. I kid you not. Depends if I'm at the chart. Phone guy, it just depends. If I'm at the chart, I'll have separate transactions. If I'm not, I might just have one and just hold it. What happened there? Yeah, I might just have one and just hold it, basically, literally just that. And if I'm want to walk away from the chart and just have pending orders, phone guy, I'll just literally put multiple, I'll put a higher risk on a sell limit. So lower risk on the bottom one, higher risk on the second one. And basically, this is only to TP1 here, by the way, people. What I tend to do is the first one I'll say to TP1, but realistically, they can all go down to here. So remember, you got your TP levels. Just because I put TP1 doesn't mean it can't go all the way down here. That's why I put target levels. But obviously, I don't want to put multiple arrows to make it clean. So I'll just do something like this.
Do you risk the same amount
It's up to
on each
you.
target?
Literally up to you as a trader. That's up to the individual. I will tend to increase my lot size, me, but that's not the strategy based. It's up to the trader. You don't have to do that. You can either risk more, you can risk less. So it's up to you when you look at your equity curve over all the trades you're taking. Can I risk more? Do you understand? If I can't, then don't risk more. When I'm taking
Understand.
the signal trades that I'm giving out, like I said, I have to take a certain amount of risk because I'm negative on my accounts, which I've been very transparent with. I was negative from the euro order loss I took in November. So I'm not taking them at 2% maybe growth. I'm taking them, I'm sorry, I'm even taking them at 1% to make overall to my target level. But then I might only make 0.50% on the trade because I'm trying to get back my negative. But I have to personally do that because of the situation I'm in. Do you understand? So
Mhm.
it's risk is always based on where you are in terms of your equity curve in your trading portfolio. Does that make sense?
Yep.
No. Just going to go through some more questions quickly. Um, will there be a third entry? Huh? There could be more entries on gold. We don't know because price action hasn't moved. If price action creates another 4 hour supply, what am I going to do? I'm just going to draw a new 4 hour supply. Let's say it creates a 4 hour supply down here. I'll draw another 4 hour supply down here and give you an updated chart. So all I do is look at the chart every 4 hours to see if it creates a new 4 hour supply. Pardon me, and then I've got to mark it up. It's more than likely not going to do that because it will take multiple hours before 4 hour structure is broken a lot of the time. So, most times you're probably checking the chart every 8 or 12 hours before a 4 hour supply can form. Um, and then on top of that, I make sure I check every day just to see if there's another daily break of structure. Um, will there be a third entry? John, it's crazy long wick on the left. Yeah, that's the highest high of all time, this wick here. They're doing the same play. They're literally doing the same play. Gold is probably going to start selling. If it continues to go bearish, then I'm going to look for more long-term sells. They're doing the exact same play they did in 2021 when I was doing exactly what I'm doing now and giving the trade analysis. And these trade analysis is, if you go to 2022, if you go to 2022 on my YouTube, you'll see I was giving out gold trade analysis. The way I was breaking it down was slightly different, but it's pretty much the same. I was just using support and resistance at that point, literally. But it's the same thing. They're doing the same thing. Anybody else got any other questions? I've literally gone through the full breakdown of how I trade gold, and you can replicate this method on every single pair trading instrument. And like I said, Neo the indicator is just being built up to do this, literally. So Neo the indicator is using support and resistance to do this rather than supply and demand. But I can easily just update it and add supply and demand. You can use support and resistance to do the same thing, people. I kid you not. You don't have to use supply and demand. It's just that I can use both because I know how to do both. But it's really just that. No, no problem at all. The funny thing is that even though I'm going to upload this to YouTube, first thing that people do as beginners, the first thing they're going to do is run away because they see it's going to be about a 40-minute video. Yeah, they're going to run away, but they don't understand what I'm actually giving them here is a absolutely perfectly free trading strategy you can just run with. Like, I'm not just saying, remember, I didn't make this stuff up. I'm not making this stuff up for anyone that's in the Zoom right now. I didn't just make this stuff up like I'm like, oh yeah, this is the supreme flying wombat strategy. No, it's literally just structure. Like, more than anything, supply and demand. I don't know who made those terms, but that's what I've just added to it. But if we get rid of supply and demand, you can trade the same thing with support and resistance. You understand? And that's what I go more into in my VIP course, and then I teach you exactly how I do it and the trades I look for, because I look for the big trades. That's what I do. If you see the trades I took here, look at this. So while we're here, and when you go to the 4 hour to the 1 hour supply and demand, what's that? And when you go from 4 hour to 1 hour, the supply/demand zone switches to the next BOS. I'm not too sure what you mean by it switches to the next BOS, but remember, it's just the same difference. If you're daily bearish, you should only be looking for 1 hour supplies if you are going to use 1 hour as well. You should only be looking for that. But that's how I keep it simple, because if not, people are going to have supply and demands all over the chart. You see how simple I kept it? Find the trend, then find a lower time frame entry. Simple. There you go.
John, at the bottom of the chart where you have
Yeah, yeah.
the target lows. So is
hmm
the top line, is that 1972,773 or is that 1973.236?
It's 1972,773. So 1972,7.
Okay, so what is that 1973.236 in green, right above it?
Which one in
Right
green? 19.
on the right on the right side where it says
Oh, that's
1972.
the short and long tool. That's because I've added that there. Usually I don't have it.
Gotcha.
That's this tool
Okay.
here. Yeah. Usually I don't have that. That's why. So.
Thank you.
I was just showing people, yeah, because I don't want to be. Remember, this is obviously not for yourself, but anyone that's still in this Zoom, this is free analysis, and you can see from when you watch back this Zoom, I just literally did all the work again. Like I said, it's not directed at you. It's just in general for anyone that watches this on YouTube. I've done all the work for you. Did you get what I'm saying? So I don't think it's fair for me to have to also be the signal provider to say, enter now. What else do I need to do is what I keep saying. I've done 98% of the work for you. I shouldn't have to sit down at my chart for the whole day to make sure everybody gets an entry as well. If anybody wants that, be willing to pay a monthly subscription and I'll sit there. And it doesn't bother me if anyone says, but John, why should I have to, mate? If you need me to sit there all day for you and make sure you get this trade, Pay me some damn money so I can feed my son. I'm gonna drop it in the. I'm real. I'm gonna drop it in there. Let me feed my son. Let me buy my son some new trainers. Pay me some damn money. If not, 98% of the work is done for you, and I think that's fair for me to say. And everybody's good. No problem at all, man. All right, cool. So let me go into this trade here. Yeah. GBP JPY. So this is a signal trade I took, and you can see. So this is me showing you the same type of thing happening here with demand here as well, and a fair value gaps this time. So price action never pulled back to this daily demand. It bounced off a fair value gap, which again is no different from you being able to use support and resistance. And you can see the same thing. So when I give out the signal, I do put entries as well, people. I want you to know NZD JPY is buying as well, by the way. So anyone that's in that VIP signal. Is beautiful. Hopefully it keeps buying. I'm looking for it to keep going, but you can see this. This was massive. So I wanted it to go into this area here. If it did exactly what you saw here, but pulled back into here, this would have been a beautiful signal trade entry. But I gave out this chart analysis before price came here in my Telegram VIP group, which you get in the VIP signals. I gave it out before. There was price action got to this level. There was a 4-hour break of structure bullish. Boom at this point, and this was a 361 pip trade, people. Straight, this was no drawdown from market open. But I never entered this trade and being specific, but this is what the trade did. So obviously anybody else that was using any other methods could have entered this trade based on however they felt to get in here. But that was a beautiful signal trade there. And I waited. I want everybody to know, this is why I told everyone I am not trading my prop accounts that I have that I've got under management or any of the copy trading trades. I'm waiting for the market to break out, and this is what I'm talking about. I waited for. There was loads of people that you probably saw making blues in GJ here, 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 and here. I don't care. I want to tell people I don't care if it doesn't look like the trend is like this. Like I don't care. I don't care what everybody else is doing. When it got into position, when you see it, look, it broke above these highs here. Now it's a clean uptrend. Now I waited for the pullback, and just unfortunately, it never came into the demand. Even if it came here, I would have took the trade, but you can see it just missed it. It held the daily FVG, and then boom, 360 pip trade. I want these. So, and I'm willing to wait 2 weeks for these. I don't care. I don't need to trade every day. And that's not because I'm super rich. It's just because the consistency of when this comes up is strong. So I want the strongest trade. I don't want a headache. And that's what I'm waiting for. So that's GJ anyway, with a bigger stop loss set in the demand. Yeah, you could ease. What's that way there? Is it okay to enter early before it pulls back to the supply or demand? So let me see, read what this says here. I'm just going to see. There's some people asking questions here. How do you draw your FVG? Okay, so FVGs are simple. It's probably very easy for you to actually just go on Google and you'll be able to just see it. Literally, if you just say how to draw FVG and they'll show you a picture. But FVG is just literally if there's 3 candle setups, that's what it is. So if a candle goes up here and then there's a big candle in between, bullish or bearish, if price action doesn't pull back on this candle here all the way down to this level where this candle stopped, yeah, the one on the first candle, the space in between there is your fair value gap. Some people call it imbalance. I know there's different words for imbalances, but that's what it is. So as you can see, my fair value gap would have been here. Let me just move this. I'll move it back. When that third candle closed, even when this candle opened, it would have been up here, literally. As soon as that's how you can do it. So you can even do it like that because you can see there's no price action wicks from this candle here to this candle where it stopped. There's no wick here on this side. So my fair value gap would have been this big. Then when this daily candle closed, my fair value gap would have got taken, like it chops it away like Pac-Man. You know how Pac-Man eats those things? It chops at it, your fair value gap. So my fair value gap would have been here. Now you can see what they did on Friday. They went more into that fair value gap, but they decided to stop here, held that fair value gap as a support, and then they continued to buy. So I wanted them to clear this fair value gap and then continue to buy. I'm not going to go into the logics of what fair value gap should do and how you should wait for them to do this or do that. It just, that is what a fair value gap is. Do you understand? I don't want to make this Zoom too confusing for people or anything like that. And like I said, there's many methods you can get through to me. Again, it's not withholding any information or anything like that. You can also at any time go on YouTube and there's many videos on explaining what fair value gaps are. But that is how you draw them basically. It's literally based on a 3 candle setup and it's the space in between on the biggest candle. So hopefully that makes sense to you. Um, back to the path tool. If you activate the magnet tool on the left, yeah, when you hover over the wick. Oh, okay, I get what you're saying. I get what you're saying. Yeah. So he's talking about this magnet tool here on the left. If you use the path tool, it will just lock everything in place. So if I was to do this, so it just locks it like that straight away. It will lock it always to the bottom of the wick. That's a good find there, mate, by the way. That's a good find. So if you're using a magnet tool, you can see it will just lock it in place like that. And it will always be it will always be at the top and the bottom of the wick. That's good. So then you're not having you're not having any discrepancies between where you've drawn your highs and your lows. Cool. So that's all good there, like that. That's a good one, mate. Thank you. Is it okay to enter before it pulls back to the supply or the demand zone? No, I would say, well, to be fair, it's up to you. You can if you want to. It depends how you view the chart. Remember, I've just got to show you how I'm looking at it, and that's what I'm doing. That's how I've been giving you guys and girls trades from last year, and that's how you guys and girls have been making money off the trades I'm giving you. So, you can always overcomplicate trading, or you can keep it simple. You understand what I mean? Like on Neo, you can see how Neo is showing you these types of things because on Neo, this fair value gap on GJ is a 4-hour turncoat. So just to show people that Neo shows you the same trades quickly, I'm going to go through the rest of the questions for anyone else's that is in here. But again, I don't want to make this Zoom too long. Just give me 1 second. Give me 1 second, people. Slow, boy. Hang on. 1 second. Okay. And then you're just going to see here. I'm just going to share Neo with you quickly. So Neo is doing the same thing for you. So you should be able to see my Neo screen. So you can see Neo showing you the trend. And all I'm doing with Neo is just coding it to make it better, better, and better and better. So NZD is flying at the moment. Hopefully it continues to do this. Exactly what I said as well. We're waiting for, was it Ord news? Okay, so JPY news hasn't come out. Let me see if it came out positive. Negative, sorry. Hasn't come out. Okay, no, we're still waiting. No, that's today. Sorry, give me a second. I just got to check this trade. Yep, exactly what I said. JPY news came out. Negative is buying. Ooh, I'm onto something. I don't know if you're in here. Any of the gold members, the VIP gold members, or we might be onto something. I'm working on fundamental analysis now because I'm not even really interested in technical too much anymore. And my fundamental analysis is kicking in. Ooh, 2024 might be good, people. Ooh, it might be good. Ooh. Anyway, now, so you can see GBP JPY. We go over to this. And then look here. So this is Neo showing you exactly GBP JPY. You can even see the daily bullish break of structure. The only thing that I'm updating, like I said, I'm still updating, is the trend is still bearish here on Neo, but this trend would be bullish. So again, it's no problem. I just got to code some things and things will get changed. But I already explained to people we're looking for buys, so you don't have to worry. As when you've got Neo as well, you also got, literally me there as well telling you certain things. So you don't have to trade Neo alone. I'll give you the strategy. I'll tell you the trades to look for. It's beautiful, beautiful setup. But you can see here right away, we had the breakup, we had the pullback, and this is the exact same FVG right here. And this is the continuation of this trade. And you had this trade up to here for 300 pips. You also even had a re-entry here where it told you where it broke structure, where you would have been able to catch a second position in here or re-enter for the trade. But personally, I just hold the swing trade. So your stop loss would have been down here. So literally Neil was telling us enter GJ from now. I wanted it to pull back to here because that would have given us a better chance of more liquidity grabs and then a pullback. Because usually when they open a week, you're expecting price action to pull back a little bit more for liquidity grabs, but they did that liquidity grab on Thursday and Friday here. So that's GJ literally there. So I just wanted to show you guys and girls how Neo is also showing you these trades. And you can see, but EJ, the trend is bullish from 28 days ago. And then when we go over to EJ, boom, you can see here's Euro JPY and the same as that thing. So it's showing you how to take it. You don't even have to worry. Boom. So here, this is where it stopped at. You wouldn't have seen this as a level of a pullback just yet because this zone appeared after price moved. But again, obviously, if you know how to do the markups I've shown you, and then you even had your re-entry here for 113 pips, and then your stop loss would have been 53 pips, literally there. Um, so I've just shown you a different version of that. Okay, please, John. What, 101? Okay, please play. I'll play. Yeah, no, definitely. If you want to get 101, you need to just look into that. I'm definitely thinking of that now, it seems. I do this all the time. I'm telling you, 101's crazy, people. It's crazy if you get the 101s. One thing I wanted to mention, if we keep on adding pairs to Neo Dash, yeah, you can't add every single pair in the market. You can only stop at 28 pairs, I think it is. Because this is all the currency pairs, and then you just add all of your metals and indexes to another chart. That's what you got to do. So I've added all the currency pairs, majors and minors here. You can't start adding majors, minors, in the exotics, everything. Just add your majors and minors to one. If you want to do exotics, add your exotics to another one. Add your Bitcoin, your cryptos to another one. Add your metals to another one. That's what you can do to make your chart like more um better. Some of us who have similar smaller screens. Yeah, that's I can't really you know you if you're talking about you can't see it, then no, you need to go to your settings here and expert advisors. If you go to your settings, this is what you got to do, mate. It's all in the Discord. It explains all this stuff. You can go to here and then you scroll down. I don't know what I need to check my MT4 on my server. It's running a bit slow for some reason. But here you go. You see, when you scroll down to Neo dashboard settings, you can change the box height, the box width as well. So it's the height and the width you want to play with. Change these settings here, and then it will make your dashboard smaller or wider because every single person has got different dimension screens. So there's no way I'm going to be able to find a perfect dimension for every single person. Some people have a 60-inch screen, some people have an 18-inch screen. You understand? So you need to go and change your dimensions there to make it fit. That's probably what your issue is. That's probably what you're talking about. So does that answer your question, mate? Yeah, so you need to go to the settings and change it so it makes sense. So yeah, if you want to get VIP or you want to get into Neo or you want to get any of this stuff, I'm telling you, like when I say Neo, it's going to be crazy. Like when it's fully finished, you're ridiculous if you're not going to spend 100 GBP right now just to get into Neo. And I say that with all due respect for anyone here or anyone that passes on this video, or anyone that watches it. Like I'm not trying to fob you off with an indicator just to make some money. This is literally going to be a one-stop shop for you to just be able to look at and then know exactly what pair to go to. And it's out now. People are using it now. Do you understand? So yeah, I'm gonna post a chart after the Zoom, mate. Yeah, so you can literally use it like that. And like I've said, you're never stuck with Neo because any pairs that can do a move in a week based on my swing trading strategy, I literally post in one of the VIP groups to say, look at these pairs, and you can put buy and sell stops at these areas, which is the turncoat areas, all the teachings there, and this is how you make money. Right now we're running on, is it 30 winners, 8 losers? There's probably more winners this week. I haven't done the win rate count. I think boom, 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 boom. Yeah. All right, cool. So let's go back over to thingy quickly. Just want to go back over to trading view. We're not here about promos, here about teaching today, but you know, a promo plug is never an issue. Yeah, so you can see that's GJ that I gave out, and then there's Euro JPY, you know, same thing. This one I could have actually entered, to be fair, because this one did pull back to the daily um demand. I never actually entered because I wanted it to pull a little bit more to give me a smaller stop loss, but it did actually pull back. It was on the daily demand from market open, so I could have actually entered this trade, to be fair. The only reason I didn't is because my stop loss obviously would have, based on here, would have been bigger, and I didn't want my the magnet tool. I didn't want my stop loss to be that big. Pardon me, sorry. So I didn't want my stop loss to be 142 pips, but that wouldn't even been an issue because it was still a 1 to 2 trade, pretty much 280 pips. So I literally could have done that. But I was looking to get out here just in case price didn't want to continue to buy too much. So it would have only been 1 to 1, which wasn't too terrible. I still could have actually entered this trade for the buy. So if I entered like that, I could have. But I'm sorry, the 4 hour break of structure was a bit higher, but still, it would have been like literally almost a 1 to 2 trade. And there's the probability of going up here. And then there's NZDJPY is the trade I did take. I'm just waiting for this to still break out. It's moving slow out of all of them. but you can see NZDJPY I did enter. You can see here just as proof. So I literally gave this trade out in the Telegram group. You can see here's the entry, here's the stop loss I gave out, and then here's the buy that it could go towards. And but you can see this one did pull back. That's what I wanted EJ and GJ to do. Monday, Tuesday, it pulled back, and that's what I wanted. This one pulled back in a week to give me a possible safer entry because they've done hopefully their liquidity grabs now and then a continuation of the buy. So I'm hoping for it to get up to be fair, I want it to go higher though. I want it to go up to here. This is where I'd love them to go up to, right here. This will get me a good account flip, but we don't know. They might only go up to this high here and then stop. We'll see how it goes. Or next week, maybe it goes up there. We'll have to see. German 30. German 30 will continue to sell. You might as well hold that to the end of the month, I think. I think it will keep selling to the end of the month now. But yeah, I'll leave it there. I don't want to make the Zoom too long because I want people to be able to come back and watch this. Because like I said, as soon as people see 1 hour, they're going to run away and they're not going to understand how much value is in this Zoom. I'll leave it there, guys and girls. I'm going to love and leave you because I'm going to upload it to YouTube as a course video for trading gold. Do you understand? So yeah, we'll leave it there, people, and we'll continue. If you want to get into any of my services, let me know. Like I said, it's one-time fee, people. So you know you're gonna get this type of thing every Sunday. Obviously, most Sunday I'm just going through the trades that we're gonna take based on Neo because obviously that's how you can make money. I'm literally giving you everything there to say, look, these are the trades you need to look for. Whether or not they give you the entry in that week or not, it's whatever. But I will literally tell you. And when we do get these big breakouts, you obviously are going to make money because we're 30 wins, 8 losses over the period of 9 weeks on exactly the Zoom call trades I give out. Um, on top of that, during the week as well, there'll be signals like the ones you can see here that'll give you. So on top of the Neo trades, there's also trades that will be signal trades as well that'll give out like this. And then yeah, you get the Neo product as well you can play with. So if you want to scalp with the Neo product, you can do that if you want, but I prefer to day and swing trade. And that's it, people. No problem at all. Guys and girls, have a lovely day, trading day. Hopefully gold gets us our sell and we'll take it from there. I love and leave you. I'll see you
Thanks.
later. No problem. Easy.